Hi, I'm Lee Stone, and this is your MaxiForex Week in Review. Today we will go over some of the major financial events of the past week and look at how they might impact the global currency markets. But before I begin with the headlines of the week, let's take a look at last week's risers and fallers. The Euro-US dollar pair opened the week slow but made solid gains throughout the week. The pair was last trading at 144.82, a gain of 1.75% on the week. The British pound had an excellent week versus the dollar. Total gains by Friday's close were just under 1.7%, and the pair closed at 163.80. The US dollar had a somewhat mixed performance against the Japanese yen. After posting a weekly gain of 3.34% the previous week, the pair only managed a gain of 0.82% for this last week. The pair was last trading at 84.73. USD CAD had a decent start to the week on Monday, but began sliding and struggled throughout the week. Overall, the pair gained 0.8% and closed on Friday at 0.9552. Taking a look at commodities, gold had a great week. By the close of Friday trading, the yellow metal had risen 3.23% to close at $1,474 per ounce. Along the way, gold broke its own historical price record 4 times. Meanwhile, May crude orders surged 4.5% on a solid week performance. The orders were trading at $112.79 per barrel at the close of Friday. In the news this week, the U.S. Treasury Department announced that they would delay their twice-yearly report on foreign exchange markets. Though the report was due on April 15th, the report will now be published after U.S.-Chinese talks next month, according to the announcement. Other important meetings are also set to take place in the next month, including meetings of the Group of 20 finance ministers, the World Bank, and the International Monetary Fund. It is expected that among other issues, China's yuan will be one of the hot-button issues. Back in February, the Obama administration had refused to name China a currency manipulator. Moreover, they said that the U.S. second-largest trading partner has made what they call insufficient progress in allowing the yuan to rise. U.S. lawmakers and the Obama administration believe that China's currency policy gives the nation's exporters an unfair competitive advantage. U.S. concerns are likely to grow as China's rise in economic power continues. In Europe, billionaire investor George Soros had presented his criticism of the European Central Bank's decision to raise its benchmark lending rate, stating that it is not appropriate in current circumstances when you have a number of countries that are suffering from too much debt and high interest rates. The European Central Bank raised the benchmark interest rate to 1.25% from a record low of 1%, where it had been since May 2009. There are some indications that policymakers are also planning to bring the rate to 1.5% in July and 1.75% in October. This rate may raise borrowing costs and hurt peripheral Euro region countries already struggling to service their debt. Soros' comment even comes after Portugal made a formal request for financial assistance. In South America, Brazil's real posted significant gains after a tax rule change took effect. This was the largest 2-week gain for the real in almost 2 years. The government has changed tax rules 3 times since March 29th in an effort to slow the 2-year 40% surge that the real has right now that's crimping exporter profits. These measures were considered very substantial compared to the expectations of traders. Last week, oil climbed above $112 a barrel, its first time reaching this level in 30 months. Brent crude topped $126 on anticipation that Libyan output will rebound when fighting ends. As a result of the increased demand for raw materials, the dollar has weakened. There is an inverse relationship between the dollar and oil, which means that, generally speaking, when one rises, the other falls. And because of this, the dollar will likely continue to weaken as the price of oil climbs. Last week, oil rose 2.3% after strikes on Libyan fields by forces loyal to Muammar Gaddafi, which in some ways ended the hopes for a prompt resumption of exports. Well, that's all the time left for today. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at MaxiForex.ru.